everybody, Allison here, and in today's video I want to talk about this setup in Apple. The reason why I like this setup so much is on the daily chart we have this nice squeeze that's been setting up. We have bullish sentiment on the compound breakout tool. We have momentum starting to build up from the zero line, and unlike a lot of the other bigger Mag 7 names in the market itself, this has done a much better job holding up the last 2 weeks compared to those, right? We still held the 30 SMA, still kept our bullish trend, and now we're starting to get this bounce up. Bollinger Bands are attempting to flare open. We have a third deviation snap, which means there's a good probability in the next few trading days the price will either stay in this bars range or continue higher. Now, it did at the very last minute flip into a bearish divergent bar, so if we do end up getting a little bit of a pullback tomorrow, ideally, you guys can jump into a better price for this broken wing butterfly than what I did for the trade idea today. But another reason I like this too is because unlike a lot of the other bigger names in the indexes, we don't have any signs yet of exhaustion on the longer time frames. On the weekly chart, we've continued to adjust the axis higher. And so until we get a few red bars in a row, that can keep going. We had a recent ATR trailing stop switch on the weekly time frame, which is a longer term bullish trend signal. And of course, the trend itself has turned bullish after testing the weekly 100. On the monthly time frame, what I really like about this for a longer term setup is our squeeze, right? We have a monthly squeeze, a low compression one. We have a bullish signal on the compound breakout tool, and we have momentum building up with room to move higher. The trend, of course, has remained bullish. The Bollinger Bands are still pointed up. So overall, big picture, I like Apple continuing to the upside longer term, and certainly shorter dated with the squeeze and the signals that we're getting on the daily chart. I like this continuing to the upside as well. Now, if it starts to break below the 30, that's where I would close and protect capital if there's any capital left to protect on the trade. But otherwise, for myself, I jumped into a broken wing butterfly for the December monthly expiration. This gives me flexibility in the sense that if it gets right to at or in the money before expiration, it should still allow for a nice profit in comparison to a standard butterfly, which if you get to that strike level too soon, right, may not be as big of a profit as you're typically looking for there. So overall, like how this looks. Just be mindful of your capital risk, right? Always do what you think is best for your account. And thank you all so much for joining me. I look forward to talking to you next time. Until then, my fellow Jedis, may the trade be with you. Bye.
Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.